Many of us think a saving account is just a place to deposit our salary or a safe place to keep money sometimes. But in reality, your savings account can also give you good interest. So, what are high interest saving accounts? How do they work? Which banks are offering the highest interest rates in 2025? Are they safe? In today's video, let's learn all these details. First, let's talk about normal saving accounts. For many years, we have been opening accounts in a big banks like SBI, HDFC, ICICI, and so on. In these banks, the interest rates is usually between 2.5 to 3.5%. That means if you keep 1 lakh rupees, you will get only 2,500 rupees to 3,500 rupees per year as an interest. And after tax deduction, the amount will be even less. But what if you keep the same money in a high interest saving accounts? Here, the interest rate can be between 5 to 7%. That means on the same 1 lakh rupees, you will get 5,000 to 7,000 rupees a year. That's double the benefit. Why? Because unlike an FD, you don't need to lock in the money. You can withdraw anytime if needed and still earn higher interest. Now, some of you might say this is not something new, right? Actually, no. This concept has existed for a long time, but it has recently become more popular due to digital banks. Yes, digital banks, small finance banks, and payments banks are offering higher interest rates to attract customers. For example, AU Small Finance Banks up to 6.5% and Equitas Small Finance Banks up to 7% and IDFC First Bank up to 6.75% and Kotak up to 6% and Airtel Payments Banks up to 6%. All these operate with RBI licenses and deposits up to rupees 5 lakhs are insured under DICGC. That means even if the bank faces a problem, your deposit is safe up to that limit. Now, how to open an account in these banks? Very simple, mostly through digital KYC. All you need is your Aadhaar and PAN card, photo and mobile number. Some banks do video KYC while others may require a branch visit. And now let's see a real life example. A person kept 3 lakh rupees in a regular saving accounts at 3% interest rate. He got around 9,000 rupees per year. If he had kept it in AU Small Finance Bank at 6.5%, he would have earned about 19,500 rupees. That's 10,000 rupees extra just by changing the account. Also, interest rates are often slab based. For example, 7% for the first 1 lakh and 5% for amounts above that. So always read the terms before opening an account. And another common question, are these banks safe? Small finance banks and payments banks with RBI license are quite safe, but never keep all your money in one place. For example, keep 50% in a large banks and 50% in a high interest saving account. This may risk is low and returns are higher. And also some payments banks like Airtel Payments Banks offer high interest but have a 2 lakh deposit limit per account. If that limit works for you, they are a good option. And now who can benefit from this? Salaried people. After paying bills and EMIs within 2 to 3 days of salary credit, keep the remaining money in a high interest account. And freelancers, park funds in a high interest accounts and withdraw whenever needed. And retired individuals earn safe interest without locking money in FDs. And emergency fund users, keep money accessible for emergencies while still earning interests. And overall, in 2025, instead of letting your money sit idle in a regular bank account, if you use a high interest saving account, you can earn thousands of rupees extra every year. And this is not just smart money management, it's making your money work for you. So try opening a high interest saving account this month and read the terms, choose the bank that suits your needs and start with a small amount. After 1 year, when you see the difference, you will realize how useful this decision was. If you found this video informative, like it and subscribe to the channel.